So let's go ahead and open them up. And the reason why I'm showing you this breakdown from bare naked charts like this is so that you can begin to see the process. I always am a firm believer that if the analysis is already done and you just kind of go through it, it takes away from the little magical moment that some people have, tipping points, aha moments of that's what I should have done, that's what I should have been looking for, that's why you did it. So I always want to make sure that I include that in these web presentations. But ultimately what I want to do here is take a look at the 3 different time frames and begin to break this down. So Australian US dollar in a 1 hour time frame, daily time frame, monthly time frame, pound yen, also pound dollar, and pound Canadian. Let me open these currency pairs up. And so that is here. Let me tile these together. Whoops, did not mean to press that button. And what do we see here? All right, so we've got here the Australian, pound Canadian, and we've also got the pound dollar and pound Japanese yen. So let's just put the monthly on top, and then we'll start to move around here. Pound Japanese yen, where is there we go, pound dollar monthly time frame. And then we've got here pound dollar 1 hour, pound dollar daily, 1 hour, and then we've got here the pound Japanese yen monthly, pound Japanese yen daily, pound Japanese yen 1 hour, pound Canadian monthly, daily, and 1 hour, and Australian. All right, so we'll go left to right. We'll go Australian, pound Canadian, pound yen, pound dollar, and see what we do here looking forward, and an opportunity, and also showcasing how I am going to be using the grid trading technique into these currencies. But I've got so far the attendance is climbing. It's climbing quite rapidly here, so I can't say this is the accurate number right now. It's climbing, but I got about 270 people in the room so far. Out of these 270 people in this room, how many of you right now do not have access or have not signed up for the grid trading course? Type in the word no if that's you. Just want to make sure that I go ahead and make sure you pay attention to what we'll be talking about. And good morning to you, Daniel. Okay, so we'll be looking at that a little bit later in the broadcast on multiple time frames, but it's a wonderful opportunity here to see how to take advantage of these markets with the waves of the market, because one of the cool things about it is that, the code, I believe the code has been cracked. When it comes time to placing trades and the market goes against you first and stops you out and then goes your way, nothing more frustrating than that, right? So to have an opportunity to have that code cracked and give you entry, but yet with better equity management, no-brainer on my end. But let's talk about this here, because this is the Australian dollar on a monthly time frame. And what we want to look at here is what's this market doing in the here and the now. See, if we look at monthly time frames from a further back in time standpoint, it could be good. It could be a good thing. For example, this from 2001, we're making higher major highs, higher major lows, higher major highs, higher major lows. So essentially, I would look to draw my smart Fibonacci's here from the lowest point and then continue that aspect and say, okay, so far on the Australian US dollar, I've got an up AB boundary if this is going to be the continuation, right, of the uptrend. And so that would be the most accurate AB boundary here as far as the look of the currency, the feel of the currency. This market gave us the 80-20 rule, came down, rallied, retraced deeper. And so if this market here is going to be giving us a extension on the monthly time frame, the extension here, with this retracement being as deep as it was, this was a low retracement of 682.52. And as you can see, that would be here, 682.52. That'd be a 786 retracement. So the 1.27 here would be the D extension at the price point of 1.02564. Let's color it blue to match the Fibonacci extension there. And so that would be the wave movement. If this A doesn't get taken out, then this market would be looking to go in its Fibonacci A, B, C to D way. So that would be what I'm looking for as far as long-term opportunity. But again, every single month, there is a candle that is born, bullish and bearish movement. So although the objective would be, hey, this looks pretty good to buy this market long-term, at the end of the day, what you have to also realize is that these markets do have some intricate wave movements along the way. And so that if we have identified the deepest retracement being a C pullback here, the 786, that's great. Let's line it up. We've also identified the D extension up here, so we have at least identified what the C to D wave movement is. Now it's really about finding the trade setups that are now taking place from C to D. Because if this market truly is going to go from C to D, it's not going to go in a straight line, right? It's going to go in a wave pattern. Has the wave pattern already begun? Yes, it has. You can see here this market has rallied, retraced, and if it looks to extend, it just looks to wave along the way. Now this wave, the waves can be higher and lower, maybe going sideways, right? There's many, many different ways this market can take advantage of going from C to D. The key is to practice proper equity management and find the best trading opportunities along the way that make sense at buy low price points, at opportunities, right, that are going to be presenting themselves with great equity management, and key timing is what it's all about. But what if you're not in front of your computer for that? Well, here we have a big AB boundary, C to D, so to place a big risk versus reward trade, not everybody wants to do that on a monthly time frame. So since this market appears to want to go from C to D, let's go ahead and take a look and see if there's a journey of trendline breaks that perhaps may have taken place here. So what I mean by that is, we'll have obviously a long-term outer trend line, okay? Then we'll have an outer trend line, and then obviously we'll have here an inner trend line. So in the realm of this market gravitating towards trend lines, breaking trend lines, and moving towards the target at hand, it's broken an inner trend line and gravitated to the outer trend line. The next bounce down, which it did. Then it broke the outer trend line and now looks to be towards near the backside. And if it continues to gravitate, then the outer trend line will be the next bounce. If that breaks, major reversal to that D. So we have a lot of space between the outer and long-term trend line. So now let's go ahead and take some smart Fibonacci tools and see if we have any kind of sub-AB boundaries along the way. And we do. With the inner trend line and outer trend line breaking, we have an up AB swing here, sub-AB swing, which is showing its face, and now it's time to bring this to the smaller time frames, because although the market appears to want to go after a big D extension, it's going to have to go after a smaller D extension way before it goes after that bad boy up there. So for now, we don't need any of this because we've got the up AB swings on our hand here. And so as I zoom in, okay, it's more of a sub AB CD wave movement from C to D. But at this point in time as well, what I can look at is, okay, what's this market doing? How's it doing it? Gave me an AB swing, came down to form a C pullback, double bottom type of formation here. This market didn't just bounce once at the same price point, but twice. And so the market has begun to rally. Could it be in a scenario where the market's just moving sideways and we come back down to support, right? And sideways movement could do that as well. Absolutely could do that. So one of the things we have to realize is that as this market's forming these types of formations, we have to go ahead and wait for the breakout to occur, or at least give ourselves the opportunity to see bullish candlestick formations, bullish rallying, all sorts of stuff like that moving forward. So this is what I'm going to look at. I've got the AB boundary right here. A, B, pretty much double bottom C, right? And if the market breaks out to the D, then we'll take off to the 1.618. That's the AB/CD swing. So I'm going to mark off the D extension as of right now at 0.84553. 0.84553 would be the D extension of this movement. That's, so far, we have that in alignment that if this market rallies and fulfills, that's the D extension of the up AB/CD swing. However, we also have to realize and be cognizant of the fact that since March of last year to now, the markets have been sideways. So what's hindering, us breaking out would be resistance and support. Tap in a wire, yes, if that makes sense, that since last year's March, we have been moving sideways. So unless we give a breakout, we're heading back down to support. And that would be something that we need to figure out very quickly in regards to placing trades so that we don't have all the expectations of a big bull breakout rally and just keep losing, right? And we don't want to be in a position to have a big losing environment. We want to have a thriving environment of where this market's going to go and how to capitalize on that. So for right now, I'd venture to say that this is pretty accurate in regards to, let me get rid of this A, B, C, D swing line. Pretty accurate here in regards to where I see the market U-turning at. Let's say right here, yep, right, U-turning at resistance, and then U-turning here at support. So if you want to take the large resistance and large support figures, large resistance 0.77462, large support 0.71637. This would be a sideways consolidation range upwards of 500 plus pips, which is large consolidation. And the D extension is at 84,553. If you want to take a screenshot of this, go ahead and type in a Y or a yes. And then when you're done with it, we'll go ahead and break this down to the daily by linking these resistance and support lines, because this is what I got to focus in on. Until this is over, the next logical step, unless we have a trend line break, would be to fall back down to support. So I'm going to go ahead and take this information of resistance and link it to the smaller time frames. I'm going to take support and link that to the smaller time frames, and the D extension here, and link that so that we have a breakout. We know exactly where the market wants to go, because the breakout from the live market is, upwards of almost 1,000 pips there, so that's great as well. And at the end of the day, we have consolidation, sure, but it could also be looked at as a potential wedge pattern, and that wedge pattern with breakouts on a monthly time frame, wedge patterns, just so we all know and we're all clear, wedge patterns do have a 500 to 1,000 pip breakout potential. Okay, and so what do I mean by the wedge pattern? Well, here's what I'm seeing so far as a potential. Just color it red. Here are the levels of resistance here, pretty much straight across. And since this A, we're kind of climbing here, so this is what I'm talking about right there, as far as a wedge pattern. And the D extension of the movement is about 900 plus pips away. So if that wedge pattern breaks out to the north, that qualifies as 500 to 1,000 pips of breakout. True or false? Right. So something to be aware of moving forward that we'll begin to see on smaller time frames a little bit more detailed here. So that's what we see so far. We've got resistance, support, our D extension. As we break this on down to the daily time frame, again, we're usurping a lot of market movement because we don't need to concern ourselves with all that. We need to concern ourselves with what the market's doing right here, right now. And as we begin to zoom in, you can see how crystal clear the consolidation begins to show up in this time frame here. Quite simply put, you can see this market here giving us levels of resistance entering the range, resistance. Here it's giving us support. Once again here, support and resistance, support. And here this market here has reached a resistance area. So by looking at this, you can see how the range began and how it's now getting a little bit tighter, but also how it could be in a wedge pattern predicament. So one of the cool things about this is that we have tools in it, that we can use to our advantage to help us out here. And those tools would be the following. If this market's going to be making higher highs, higher lows, higher highs, then we should have a trend line that would be bullish. But we don't have a trend line that's bullish right now, because if we were to go ahead and draw a trend line from support, then what we would see is this market here would, from this low, it would have broken by now, and the market here is making lower lows, lower highs, lower lows, lower highs. So how do we go ahead and capitalize on this right now? Well, as this market here is showcasing support, resistance, and now potential for the breakout to the north, long-term at a consolidation, every time this market here is at resistance or is at support, we need to look for buy and sell opportunities here. So at resistance, what's the highest point so far, which is right here. I'll just go ahead and utilize the smart Fibonacci's. And here's the smart Fibonacci's here from resistance. It's made a lower low, lower high, lower low, lower high here. And as you can see so far, this is where this market's at on the Australian daily, which is in a downswing at the moment from resistance to support. And the A is at 0.76796. The B is at 0.74723. The C pullback came all the way up here to a 618 retracement at a high of 76103. So it's a 786 retracement. I'm sorry, 618 retracement. 1.618D extension here would be the target. So we map that out right there. 734. 0.734. 42 would be the D extension. We'll color it red. And so this would be the swing here on the daily that I'm looking at to fulfill if we're going back down from resistance to support and moving in a Fibonacci direction. That's the ABCD wave movement. So this market here, even though we have quite a hefty amount of pips to go from the current live market to support, about 400 pips, the actual D extension would be about 200 pips here. And so right now, what we're looking for here is an opportunity to perhaps give us a trend line break, okay? But here's one of the things that we also must realize is that how do we know where this market's going right now, as far as is it going to break the trend line? Is it too late to wait for the trend line to break on a daily before entering the smaller time frame? I believe it is too late to enter once the trend lines break on a daily because there'll be too much risk. So what we're going to be focusing in on right now is on the 1 hour time frame, right? We have to realize where are sell high price points here. There's a sell high, there's a sell high, there's a sell high, and this is a sell high, okay? As far as buy low, that's a buy low, that's a buy low. Heck, that's a buy low right now. So we need to wait for the market to reach a sell high, which we have, and we'll be looking at analysis over the last 1, 2, 3, 4 days on the 1 hour time frame, and we're going to be drawing trend lines in the 1 hour time frame, which would be similar to a counter trend line here, but it would be an actual trend line over the last 4 days on the 1 hour time frame. And what we'll look for is perhaps we'll look for a reversal, like a crown, something like this, to help us along the way. And then once that takes place in the 1 hour time frame, we can draw a downtrend line and begin trading towards that D extension. If that makes sense so far, type in a yes. And if you want to take a screenshot of this daily chart, let me know when you're done so I can go ahead and break this down to the 1 hour time frame. Okay, so let's go ahead here and break this down to the 1 hour chart. I will take this D extension and link it to the 1 hour time frame, which is about 200 pips away. And by taking this now to the 1 hour time frame, here's what I'm going to do. First of all, I'm going to write down the AB boundary of the Australian daily so that I can map out my 1 hour chart. 0.76796 is the A, and the B is at 0.74723. The reason I map out the A is because I want to see this swing on my 1 hour time frame so that I don't end up making decisions that are, not logical because of just market movement. Okay? So what I'm going to map out right here is just where's the AB boundary, and then I'll delete these lines. Let me color these lines here real quick. The A is going to be at the price point of 0.76796, and the B will be at 0.74723. And again, this is for the daily AB boundary. So this is how I'm mapping this out. I've got my daily A right there. Got my daily B right here. This so far is my daily C. And this red line right there is my daily D extension. Having a Y or a yes, if by doing this, does this help you visualize what this market can do on a smaller time frame? So if it goes bullish or against you, if it doesn't take out that C pullback and starts to fall, you at least have that peace of mind that, okay, I know what it's doing right now. I need to figure out how to get from this area right here to this area right there, okay? And so what are we going to focus in on? Keeping it simple. We have to look for trend line breaks and opportunities because obviously we know this market is in a down A, down B, down C to down D pattern. But obviously, take a look, right? This market's waving up, waving down along the way. And that's what creates the jumpiness. That's what creates the confusion. That's what creates bad trading habits, is not knowing what to do when these markets are making these waves, right? Getting in at the wrong time. So let's fix that. Right now, the market's been pulling back bullish, okay? So if it doesn't take out this C pullback, then guess what? It's like a candlestick formation. If the candlestick formation, which gets tested 50% of the time, doesn't have any more buying interest, the bearish formation will take over. Well, if there's no more buying interest on this daily C, guess what's going to take place? It'll fall. All right, so let's zoom in. Do this. Yeah, sure, John. If you don't like bearish moves, of course you could try something like that. So this is the last 4 days of movement being, pullback right now, and so what we're going to do is focus in on the following. With this pullback, every trend, there's trends inside of trends, okay? So what's the lowest point? Which would be this candle right there. That's the lowest point of this last 4 days, right there at a low price of, 0.74915. So I'm going to take my smart trend line, okay, and I'm going to just draw there. This is my long-term outer. This would be my outer, and this would be my inner trend line. So as of right now, it appears that at a sell high price point on my 1 hour time frame, the market has broken my inner trend line. So with an inner trend line break, okay, the next step would be for the market to naturally gravitate towards that outer trend line for the next bounce to go bullish. But if that breaks, then naturally gravitate to this outer long term for the next bounce to go bullish. If that breaks, then we have that major reversal to head on down towards that daily D extension way down here, about 200 plus pips away from the current live market price. If that makes sense, type in a Y or a yes. Okay? And so what would I do here in this particular situation? There's a couple of things that this market can do. And this is why grid trading is so spectacular, because a couple of things can happen here. Number one is this market can give us a very small wave right here. And that's saying, let's say if it's going to continue to fall. You get a little small A, a little small B, a little small C, and then fall down like that. Okay, that's one way. Or it could just fall like this, take out this low support, then pull back, and therefore give us a left tip, center tip, and then right tip, like that, and trendline break, and form a king crown. So there's different scenarios. That's why grid trading is so important, guys, because it gives you the capability of whether you're in a position or not, you can go ahead and get taken in via the retracements so that when the market begins to go back in your favor, you are getting paid. Okay? And the matrix that comes available here is phenomenal because we know this market moves in waves. How many of you have lost in a trade before, and maybe you don't remember this or not, but when you've lost in your trades, you've been in the trade for quite some time, and you see there's a lot of waves along the way. So if you would have gotten in strategically in those waves, you could have made your money back that you lost, even though it was a losing position, right? Same thing as the concept here with grid trading. If you want to sell the market right now, and let's say you want to make 100 pips net, if this market goes against you and takes you in, and then waves back down, and then breaks you even on your trade, but you made 50 pips on the move, and then retraces again, and then breaks even and makes another 50 pips, here's your 100 pips net, even though the market waved against you. It's phenomenal, and I'll show you that technique here in a little bit. But here's how this is going to work as far as the grid trading here. We know that our objective is to get down towards this target, right? So what I'm going to do right now is I'm going to keep things real simple, and then I'm going to go to the next currency pair. But there's an algorithm here that we have to formulate, and I'm going to put 500 bars of memory here to make it nice and tight. Okay, and then one of the first steps here that you got to do to find out the formula for the grids is to go ahead and do a little bit of a mathematical equation that's going to be taught to you in the class also, in great detail. But use 500 bars of memory to find it, first of all, to optimize your strategy, to amplify your results. So what we're going to do here is also measure the highest and lowest point of the time frame, okay, with 500 bars of memory. So with 500 bars of memory, this is the highest right here, and this is the lowest right here of the time frame. So I'm going to go ahead and measure that. That's approximately 208 pips. Okay. So I'm gonna take the formula that we've got here. I'm gonna take 208 pips and multiply that by 3, which gives me 624 pips. Divide that by 2, and then divide that by 10. 31 pips is the grid. Okay, 31 pips. So each grid level would be 31 pips in distance. That's fantastic. In my opinion, I love it already. So how do I input that information? Well, let's go ahead and do that, because what we're going to do is right-click on our charts, and right there where it says Matrix, open it up, and here's the Australian dollar. I want to, Josh will teach you more about different levels. I'm going to put 10 levels here just to go ahead and show the demonstration. How many lots per level? It's set up 1 micro lot as a default, but you can do it. You can go ahead and set it however you want. You can do 5 micro lots. You can do a mini lot. Right? You can do a standard lot. Really up to you. However many different lots you want for the levels. All right, let's keep it simple with 1 micro lot. The distance, we just figured out the formula, is 31 pips. So 31 pips. And pending orders, I want, Josh will show you one-sided market movements. I want both sides in case the market retraces. And since we're looking to sell, we'll sell. But I want to be closed out on 31 pips. I'm going to show you how to make just 31 pips. Right? Click OK. And now the grids are there. Simple, effective, okay? Helping you understand how this market works. So we're taking in on a trade right now. If this market falls, okay, towards the south, breaks the trend line, we make our 31 pips. Because each grid level is 31 pips away. And if we strike that grid level, then guess what? It automatically takes us out of our trade, and we go ahead and we'll just reset the levels and re-enter the trade, and we'll have all our grid levels again to take us along the way. Because if we get a pullback, we want to be taken in at a better price point. It's a wonderful, wonderful scenario to help you make a legitimate amount of profit consistently and accurately. Now, here's how this works. Okay, we're already in there, so that's where the trade is so far with the grid, and we'll just continue to watch it. The inner trend line being broken. Market looks to naturally want to gravitate to the outer trend line. I'll go ahead and set an alarm on that trend line so that the trend line does break. Okay. And what we'll do here is, when it's crossing the trend line, we'll use an alarm. And let's just go ahead and what's the alarm? Let me change that alarm. Yep, that's good. Save and run it. So there's a clock right there. So if the market scratches or touches that trend line, I'll get an alarm and we'll know moving forward. But again, if we're looking for the position trade, we can set our limit here. We can set a hard stop up here. So all that's wonderful. John, yes, you could trade the grid with stop losses. I'm just showing you how it works. In the matrix, you would see that there's a stop and limit. So I would set my limit to this D extension. But right now, I'm just showing it to show you trading for 31 pips. Like if it falls right now 31 pips, to close me out with 31 pips net. Okay. All right. So, and again, Aaron, great questions. That'd be something I would direct towards Josh when he teaches the class, because there's many different reasons why he talks about 1 or 2 levels, or I'm just showing you an example of 10 levels. But you don't have to place 10 levels. I'm just showing you so you can see the power of the grids on your charts. Okay. But if everyone sees how this works so far, type in a Y or a yes, and then I'll go on to the next currency pair. And is the Australian US dollar okay? Everybody got a full understanding so far of what's taking place here? Cool. All right. And as far as stops and limits, I'll show you how the stops and limits work also, John. I should have said that first. My bad. My apologies. But then we'll go ahead and take a look at that here moving forward. All right. Pound Canadian. Okay. On the monthly time frame. Pound Canadian doing exactly what we've already known that it was going to do. Now, again, we're not psychics. We can't just, say 100% accurately the market's going to do what we say it's going to do. We have to go with what the market's going to do and trade with it, right? But it's pretty easy to predict the market movement when we see what's taking place. So essentially here, this market on a monthly time frame has given us a trend line break. It's also taken out this low support. We see a left tip. We see a center tip with a low. And now, clearly, we're just looking for the market to form a right tip, king crown, before it falls. That's why the market at a buy low price point has been climbing over the last 1, 2, 3, 4 months. Okay? Also part of our pound breakout prediction. So in this particular instance here, what I'm going to do is I'm going to draw a Fibonacci here of the King Crown, which is here, A to the B. And so far, one of the cool things about this is that, Chief always talks about this market rallying toward the 382 pullback or descending toward the 382 pullback when a new boundary is formed, has 80-90% chance of being struck. There's also a past support that can become resistance there. So I'm going to take this 382 pullback, and that's a price point of 1.78290. And I'm going to color it red, which is the Fibonacci de-extension color. And type in a Y or yes, that makes sense, that this market appears to be gravitating towards the 382, past support level, becoming resistance there as well, opportunity. But that tends to be the case on multiple swings, is that the market can give us, a 382 pullback with 80 to 90% accuracy of being fulfilled, right? So we don't have the C pullback just yet. Right now, the de-extension would be set down here to 1.618. But for right now, over the last 1, 2, 3, 4 months, the market's been bullish. So let's take this 382 pullback, link that to the smaller time frames. And so now what I'm looking for is I'm looking for the opportunity here to see. First of all, if any of you want to take a screenshot of this, go ahead. Forgot to say that. Sorry about that. Let me know when you're done with that. Okay. Great question. Education specialist, if you can let Judy know when that'll be available, that would be fantastic. Judy, I don't have the question, I don't have the answer for you right now, but we can get someone to respond to you in a few moments, okay? All right, so excellent. We took the monthly time frame. We've linked the line to the daily now. And so again, now it's all about marking off what this line represents, which is the monthly 38.2% fib retracement level. So we know, why it's going there or what it's doing there. And ultimately here we see that this market, is it breaking trend lines? Is it giving us opportunities to see breaks? Absolutely. There's the trend line breaking to the north. And in the last 4 months, the market's rallied, retraced, and extended here. So in this particular instance, since this market has been climbing, we're going to take our smart trend lines. And until the market fulfills that monthly 382 retracement, we're in the buy zone. We're doing great with opportunity here. And when we draw our smart Fibonacci's on the daily time frame, we figure out where this market's at. And as of right now, what you can see here is that our first A, B, C, D swing fulfilled just, like 4 days ago. It fulfilled the D extension 5 days ago, fulfilled it. And then now we're in a new A, B swing here. So a couple things can take place. With an AB boundary, it's only got a 20% chance from this price point to rally aggressively to the D extension and therefore striking the monthly target. It's got an 80% chance to either A number 1 pop up above the B high and U-turn around these areas and come back down, or just simply put, come back down towards the 382 pullback towards that trend line. And logically, by looking at this, where are we at in regards to price action? Are we at a buy low or a sell high price point right now for this opportunity here? Yeah, we're at a sell high price point. So, but the excitement's there, right? We're close to that 382, Jose. It's giving long wicks to the south. This bad boy's going to go. How many times have you told yourself that, and then the market did completely nothing close to what you thought it was going to do, right? And the price action was victorious. Because the price action, if there's one thing we can all agree on, is that as a buy or a bull trader, we want to buy low in the market. Okay? As a bear, we want to sell high. So what we would need here is confirmation that the market's going to fall. How do we have confirmation? We need, patterns up here on a smaller time frame. We need trend line breaks. We need anything we can see that the markets are falling or beginning to fall. And then we can begin to say, okay, sell high. But right now, by looking at it, you can see buy low, buy low, buy low. Okay? And as of right now, we have a sell high, sell high. We are at a sell high. So if this market has, a great opportunity here to begin falling towards the 382, then logically, you need at least three candles of retracement to draw a counter trend line. And so we do have 1, 2, 3. If we draw, a smart trend line across the B high, you can already see that this market is below the smart trend line in the sell zone. So it already has begun to fall, even though we have a long wick to the south. It needs to break this trend line. And even if it breaks this trend line, it's only got a 20% chance to shoot up. So what I mean by that is we could probably have a couple more days of bullish movement and then get stuck up here on the 1.1827 and then come back down. So we might be in the middle of the buy low to sell high area. We might not be in the sell high area just yet, but as long as we stay below this, over the last 1, 2, 3, 4 days, this market's been retracing. So that's what we'll be seeing on smaller time frames. We'll be seeing a downtrend, sideways kind of downtrend on the last 4 days of movement here. And the 382 pullback is right here at the price point of 1.69079. And so, again, this would be an opportunity to take a look at that. And this is the monthly 382 bullish or bearish retracement here, okay, for the market to pull back towards bullish. So, but as we're heading towards it, this is also a swing that can retrace towards the 382 pullback before climbing. Type in a Y or a yes if you agree that this market could retrace and touch that 382 price point and then pull one of those bad boys right there, right? So just making sure we all understand what's taking place here. So let's label this. This is the daily 382 Fibonacci retracement level. And with the daily 382, now at a sell high price point, what we're going to be looking for, obviously, in a smaller time frame, like the 1 hour, is where's the market going to go and how do we take advantage of it? And I'll show you how to place your stop with the matrix tool if you want, how to place a hard stop, because in situations like this, maybe some of you have made hundreds of pips and you're about to go on vacation and you don't want to, have to stress out about the market not going your way or pulling back, but you want a hard stop just in case so that when you're on vacation, when you come back, you know that, hey, you know what? I had a hard stop in place. If it took it out, it took it out, but that's all I wanted to risk at that point. No harm done. I wasn't available to monitor the market. I'm okay with that. And that's your prerogative if you do that or not, but I'll show you how to do that here. So far, until the market breaks a counter trend line, it's got 20% chance to rally to that D extension. So the more logical approach would be to find the market retracing to that 382 price point here to the south, which is where I'm going to focus my attention on. So type in a Y or a yes if you've taken a screenshot of this AB swing, which is at 1.62084 to 1.73403, and the monthly and daily retracement there. And so this is what I'm going to do now. I'm going to link this 382 pullback to the 1 hour time frame. Okay. And okay, so it looks like we got it here. And we're going to go ahead and open up the 1 hour chart. And on the 1 hour chart, this is what we see. This is the monthly 38.2% fib retracement level. And now you guys know why I start all my analysis from scratch during the webinars, so that, because imagine if I had 382 retracement, 382 retracement, people would be like, what is this? I don't understand how you got those levels. Does everybody see why I start from scratch now in every webinar? So you can see the why behind the movement, the thought process behind it. So this is the daily 382 pullback retracement here. And so now, in this instance, what we need here is to focus in on what's been taking place, right? So if we zoom in to kind of take a look at what's taking place in the market, do we have any patterns? Do we have anything here that's highlighting this market to show, possible bearish movement, bearish retracement? And ultimately here, this is the most recent, even though it's the ugliest move around town, it's a higher high, higher low, and a higher high. That's the most recent A, B, C, D swing movement there as far as A, B, C, D wave movement there. So this is where I would draw my inner smart trend line on this time frame. And so there is an inner trend line break here. That's a fact. With the inner trend line break, do we have any kind of patterns that are available? Well, if we zoom in here, we can see that when the inner trend line broke, okay, came down and gravitated towards making a new low, broke the trend line, took out this low of support, created a new low, and so far has pulled back to right around the equal level of resistance that we've been seeing here. So what I'm looking at here is this market spiked up pretty heavily, okay? And perhaps, you know, we're in an arena for a king crown reversal pattern. If you can see that, type in a Y or a yes, and again, I'll draw it out with this. If it begin to fall, I mean, there it is. If it turned green, it's accurate. So, for the purposes of demonstration, right, we're looking to say, all right, trend line broke, and I don't really want to focus on the A, B, C, D swing of this movement. I want to trade towards that daily 382 price point, right? That's where I want to go because I want to focus in. I mean, if I did focus on the king crown, then, you know, this is what the king crown would be. This would be the A, and this right here would be the low of 2 to the left and 2 to the right. B, I believe, took it out, didn't it? Or equal it, match it? Nope, the next one did. And so this would be here a retracement, pullback high of 1730.15, which is 618. Market scored a point, pull back. If it scores the next point, 1.618 would be the target, which would be around, in the live market, about 190 pips or 368 pips to the south. So let's just say I don't want to go after, you know, if I sold the market, I don't want to go, I don't want to risk 65 pips to go after 184, or I'd rather go up to 365, you know, depending on where you want to go, what you want to trade. So since we know this information, now we can use the grid to help us. And so as far as hard stops, if I wanted to place a hard stop here with low risk, 65 pips in risk, I'd place my hard stop up here at the high of 1734.03. So let me go ahead and put that up here at 1 point. Let me just write this down here. 1.73403 would be my hard stop, okay? And then my hard limit for the trade would also be down at the retracement level at 1.690, 79, okay? But I'll have also trades along the way that can take me out if I wanted to use, you know, the net stop of pips. But if I wanted to leave the positions in, this is how I would do it, okay? Now, obviously, this market moves in a wave pattern. This market, wave down, sell high, buy low. Sell high, buy low. Right now, we're at a sell high area of the market to begin our next buy low process here. So I would take this opportunity to go ahead and say, all right, I've got this area, identified what I want. And again, this will be different on every chart. The formula still remains the same. 500 bars of memory. Find out what the highest and lowest point of the chart is. So this is the highest point of the chart, which would be where my hard stop is. This is the lowest point of the chart right here. Measure it. It appears to be about 828 pips. Okay, 828 pips. Let's take the formula. 828, multiply that by 3, divide that by 2, and then divide that by 10. So each level for the pound Canadian is 124 pips in level. Now, does that mean you have to trade a mini lot per level, standard lot per level? No, you could trade micro lots or multiple mini lots per level. So it's up to you, and you're going to have an equity management plan that's fantastic, so don't even worry about the market going against you at first. Okay, that's why leveling was even created, or sizing into the market. So as we do this, let's take our matrix. Wait a minute, what was the first thing? 124. Okay, let's take our matrix. And in our matrix, we're going to go ahead and put multiple levels. Let's put one distance between the levels, 124. And then above or below the market, we can put to get sized in above and below. And then you'll be shown one-sided trades. Okay, I'm going to put both sides just so you can see how this works. Okay, but at the end of the day, if we're going to put a hard stop, let's just put in, for example, below the market, right? Below the market, and to sell the market based off this movement. And I'm not going to close all orders on net pips because I want a hard stop and a hard limit. So for John earlier who said, you know, do you trade the stop or limit? Here's the stop loss target price. if you want your stop loss right there, click on stop loss and enter it, which was 1.73403. And then the limit would be the 382 retracement level. And it can be a lot more conservative than that. It doesn't have to be exactly what I'm showing you here, but 1.69079 would be the hard stop and hard limit. And so click OK. And now you see the levels and your hard stop. So right now we're taking in bearish with this level. Okay, we're in a bear trade at a sell high price point. So, and we have a hard stop. So no matter what, if the market goes any deeper than this is our hard stop. We're absolutely non-negotiably don't want any more risk exposure than that. Hard stop. If it falls and strikes in this area right here, we'll be taken into another additional. We'll size in to the trade, and then size in again to the trade, and then be exited altogether when we strike this limit. If that makes sense, type in a Y or a yes, everybody. As you can see the difference between one-sided positions with a hard stop and hard limit, and then also the size-in strategy that I showed you earlier with above and below the market for net pips. And it's just a great strategy because the market moves in a wave pattern. You know, it moves in a wave pattern. It's the reality of the situation. So by the market moving in a wave pattern, it's going to be a lot easier for you to not worry about, you know, if the market takes you in here and then pulls back, okay, you can be sized in again. So it's going to be a wonderful opportunity here. Where did I place the cursor? Oh, Luana, all I did was right-click. I right-clicked on my charts. When you right-click on your charts, a box will appear. Okay, just right-click anywhere, and it's right below where it says buy and sell. You know, when you guys are enrolled in this, you're going to get this, again, by the time the class comes around mid-May, you're going to get this will be included in your charts. It'll be like a little upload, and you'll be able to upgrade your charts to have that feature there. So one of the cool things about this is that you know, those traders that signed on as early bird traders were able to go ahead and have this matrix tool, you know, at no additional charge to them for life. At no additional charge. They enrolled in the grid trading program, and now they're going to get this tool, this matrix tool, for life, while everybody else will have to have, you know, an additional monthly fee. But I will say this, because I was given the green light. How many of you here like this tool and you haven't signed up yet, so you missed out on the early bird special? Type in the word me if that's you. If you missed out on the early bird special and you weren't able to sign up, or you weren't able to even speak with someone about this. But first of all, you know, as you're doing that, is everybody okay with what the pound Canadian? Can we move on to the next pair? Okay, cool. Well, I will say this, everybody, for those of you here that missed out on the early bird promotion, where this tool was available for life, stick around with me. I've got some great news for you in a little bit. So, all right, pound Japanese yen. Pound Japanese yen, what we've seen is it's in a sideways range of consolidation, right? It's been moving sideways for quite some time. And recently at the support level here, what we're seeing is this market has formed a very large left tip, center tip, right tip crown. So the AB boundary that I've got here as far as, you know, the Fibonacci's are the following. I've got my A right here. My B is right up here. And so I've got my crown A. Let me take this magnet off. Crown A right here. I've got my crown B right here. I've got my crown C. And crown D would be here at the, let's see, we have the retracement level of 124.771, which is the 86%. So 1.18 would be the Fibonacci D extension. Let's color it green to match that movement. And so what you see here is, yes, we do have a long-term approach to the C to D wave movement question here, you know, but and this market doesn't move in a straight line; it moves in a wave pattern. We can already see that it's rallied, it's retraced. So, do we have any, you know, additional smart Fibonacci's like we did on the pound? I'm sorry, like on the Australian yen for up AB boundaries, and there it is right there. We have a sub ABCD swing, the first wave movement from the capital C to the capital D. Does everybody understand, you know, why I do this in regards to, for example, I have my capital A, capital B, capital C, so the anticipated direction is to go to the D. But along the way, there are wave movements that take place, and this is why I draw the subswings. So those are the wave movements, the sub-AB boundaries are the waves along the way. And Kevin, thank you for your number. We'll reach out to you a little bit before the webinar is up. Thanks, buddy. I saw Mohammed. I saw your number earlier also, so thank you for that. We'll reach out to you guys. So what we're looking for here is essentially this most recent AB swing. Okay, and Aaron says, Jose, why isn't your B at the high? It's not at this high here because I used the rules of the king crown. The rules of the king crown is when the market broke the trend line, up here like this, when it broke this down trend line, here's the left tip with the lowest support right there, or the high of resistance. Here's the center tip, and when this level of resistance gets taken out, it's the first high that takes out equals or matches. So that's why I used that high. And then this market just gave us the 80-20 rule, came up, came back down, formed a right tip. That's what we're anticipating. Does that make sense, bud? The steps of the king crown. Okay, so if you want to go ahead and take a screenshot of this, go ahead and let me know. Type in a yes when you've got it. And then we'll move on here towards the smaller time frame. And Frank, I would definitely go ahead and make it a point to bring that up with your account rep or maybe an analyst on demand, and they can spend a lot of time helping you on that. One of those things that we definitely want you to understand and get better at. So on the monthly time frame, we have our capital D, but since this wave movement here is A, B, C, to D, this market here is retraced through the red level, so the 1.618 at 163.084 is going to be the target, 163.084 is the fib target that we'd be going after as far as this most recent little wave. And so that's what I'm going to be linking here onto my smaller time frame. That's a very larger D extension, but this more conservative D extension, it's more tangible to be hit more aggressively here. So obviously now what we're looking for here is we're looking to see how to take advantage of this, but do we have any trend line breaks, right? Do we have any market opportunity here, to start buying of the pound yen? Is it too early? Is it too late? Well, over the last 1, 2, 3, 4, 5 months, this market has been falling from the B high, and we don't yet have a trend line break. So, but the market has retraced all the way down past the 382 or on the 50 at a little area of resistance here that's holding strong as support. So, I believe we're at a nice buy low price point now. So it's a matter of finding patterns in the market here to begin buying towards that. So we already linked the D extension from the monthly to the daily. And so here on the daily time frame, now we can zoom in. And what you can see here is very simple. This is the wave up, wave down. This is the monthly subswing right here. Monthly A, monthly B, monthly C, opportunity to monthly D as a subswing to the north. That's what we're looking at. So by zooming in, what we're going to be looking at here obviously is, do we have a more conservative type of AB boundary? Should we use smart fibs? I think yes, it'd be a wise idea to go with a smart Fibonacci tool here, and if you're not familiar with the King Crown, to use the smart tools. And the smart tools give you your second AB boundary, and it's giving us the 80-20 rule beautifully. Okay? And what the 80-20 rule does is the following. Look how this 80-20 rule here works. The market gives you an AB boundary, and if it U-turns at or before the 382, which it did right there, it only gives you a 20% chance to reach the 618. 20%. So it didn't do that, right? It came up right around the 1.1827, found resistance, and has since then retraced deeper in the boundary to test the levels of the Fibonacci's, and then we'll begin to climb towards the 1.618. Had an 80% chance to fall into the AB boundary, and you can see that it's done that day after day after day after day after day because of the 80-20 rule there. Powerful, powerful tool. So let's take our smart trend line here from this highest point, and you can see that the market here on the daily time frame has broken since 1, 2, 3, 4, 5, the last 6 days has been bullish here. But what takes place in the market? What takes place in the market is that the market breaks a trend line and it rallies. And what's the next step after it rallies? Retraces, right? Declines is one. It rallies, retraces, and then extends. So there could be a couple of days of bearish movement here, testing the backside, right? Forming an up AB swing here. So we have the up AB boundary here, but we would need to form a new up AB swing here, and the market's probably forming a high of 2 to the left, 2 to the right, so we'll begin to see some bearish movement here. So how is this going to be, taking place in regards to, our overall direction to trade the pound Japanese yen? How do we size into this? How do we use the grid to this? Do we use the grid to buy? Do we use the grid to sell? In my opinion, I would look at the grid to buy here, okay, and let the grid take you in according to the waves in the market. Now, again, a superior equity management plan will be laid out before you place any trades. And if the risks are too big for you, you don't take the trades. You pass on the trades. However, you can also not have the grids go below this, so that when the market retraces, if it takes you in to go deeper, you can also have them above. But ultimately, what we're looking at here is if this market isn't going any deeper than what it is right here, this area at 151.370 is the daily D. Okay, 151.370. And Thomas, I see your telephone number. We'll reach out to you too, Thomas. Thank you, buddy. Gotcha. 1.618 is the D extension. So what we see here is we see our monthly sub D, and here we have our daily D right here. So what we're looking at here is AB boundary, C pullback, rally, retrace, extend, trendline break. If you have this information here so far, take a screenshot, let me know, and then we'll go ahead and break this down to the 1 hour time frame. Okay, so let's take this daily D extension and link that to the 1 hour chart, okay, because now that is, from the live market, the monthly is 2,000 pips away. The daily is about 1,000 pips away, a little bit over 1,000 pips. So that's a good amount of profit opportunity we can look to take on. Okay, so what I'm going to do now is I'm going to go into the 1 hour time frame. And on the 1 hour time frame, as you can see, there is the monthly sub D. And here's the daily D extension right here. And I can go ahead and link, the A, B, C, D wave movement, the daily, just like I've done the other charts. But ultimately here, what you can see is the trend line that broke. Smart trend line broke here. So, well, everybody saw it here earlier, but as you can see, I'll just hand draw it real quickly. Trend line broke, okay? And as the trend line broke, this market here, just by looking at it, right, you can see where we're at right now. If this market wants to test the backside of the trend line's been broken, okay? So one of the cool things about testing the backside is this market's making a lower low, lower high, lower low to begin falling towards that backside. But if the trend broke to the north, then we can delete this trend line and we can begin to draw up trend lines, such as long-term outer trend lines here like this, long-term outer, outer, and inner trend lines like that. So the cool thing about that is that we're at a trend line bounce opportunity for the market to give us a buy. But if we break this, then we can begin to gravitate towards that long-term outer, okay, for the next bounce. If that breaks, long-term outer. So we still have, okay, this market bounced once here, here, which is this trend line right there. So if it breaks this, that's where I'd anticipate the market to go down towards before the next big rally. Having a Y or a yes, that makes sense. But on a 1 hour time frame, if this is climbing over the last 4 days or so, right? We'll take our smart Fibonacci's and see where we're at, right, with Fibonacci-wise analysis. Let me go ahead and do this real quickly to make sure I've got the right ones. Yep, that's the lowest point. Got taken out there. So that's what we see right here. Okay. So as long as the market's in an up AV boundary, what we can see is this market made a little Gartley formation. And did the Gartley formation already complete? That'd be a good question. This gave us a retracement to the 618. And so the 1.618 would be the D extension right there. So it breaks the trend line. That'd be the fulfillment. But since we're at an uptrend line as well, that could be a potential bounce opportunity. Oops. So on a 1 hour chart, as of right now, if it doesn't go any deeper, right, then the 1.618 would be the target. Okay? So in this particular area, what we're seeing here is how do we take advantage of this opportunity? Now you can scale into the market here with smaller lot sizes and still be able to take advantage of this market quite nicely. So let me go ahead and link, or not link this, but let me take the bars of memory and change them up a little bit to 500 bars of memory. And you can see this is the highest point of the market, and this is the lowest point of the market for us to figure out the calculation here. As far as the grid levels, and this would be 611 pips approximately. So let's take the formula, 611, multiply that by 3, 1833, divide that by 2, divide that by 10. 91 pips would be the levels, 91 pips. So in this particular area, if I just wanted to make 91 pips, if I didn't know, what direction this market really wanted to go, if I wanted to break down bearish, but I was anticipating a bullish bounce, 91 pips, keep it simple, okay? We have daily targets to the north. We have 1.618 targets here. Let me just put the matrix on here. I put multiple levels, 91 pips. We'll do both sides here just for the sake of it. And then as you can see here, let's say I wanted to make 91 pips and close out net on 91 pips. Put 91 pips there. This would close me out with net profit, and I wouldn't need to put the stop and limit on there to be closed out of that. Now you will have stops and limits accordingly. So in this particular instance, what would be the risk versus reward to the D extension and to the A? That's going to be equity management that you're going to be looking at, okay? And so again, Randall, I can agree with you on that. It's just the formula that Josh has created. So we'll see. I mean, using 15% of that would be something that we're going to ask him about that, because it's a great question. I've gotten a lot of feedback from a lot of traders on that. So click on that, and there's the grid levels there, where if this market now is taking us into a buy trade, if it reaches this first grid level, 91 pips, we're done. Closes out 91 pips. And then it'll take us in again. And the levels just continue to help out. Doesn't matter if this market does this or begins to do that. What these grids are designed to do is to help you dominate this market, so that when you're up, you're locking in profit and you're closing out. When you're down, you're sizing in to make that profit back quickly and efficiently. Type in a yes if this makes sense here, as far as helping you with, maybe there's no candlestick formations at the time of entry for you. Maybe there's no trend line breaks. But the markets move in a wave pattern, because the reality is this, everybody, okay? When you're looking at grid trading, okay, the reality is this is for anyone who wants to win 90% of their trades by taking control of the wave movements. Okay? If you own the mastermind club, if you own the leveling course, if you own target trading, this is a must for you. Must, to make your trading life easier, to make your targets simpler, more effective. This works on any pair, on any time frame. You don't even know much about trading to be successful once you learn the grid formula. Okay, it's pretty awesome. So as we start to look at this opportunity, we see how this market works. And again, what you'll do is you'll have your net pips taken advantage of here, but if you want to go ahead and see, how to place your stop and limit, you'll have your stops and limit automatically. And by looking at the grid formula, you can see how already, and we just entered the pound Japanese yen right now, but look how the other two grids right now are helping us out with some trades. Having a Y or a yes, if that makes sense, how powerful this can be to help you identify trading opportunities and to make some pips based off the wave movements, so that if you're losing on a trade, it'll size you in. Now again, you can make it with small lot sizes, you can make it with big lot sizes. You'll be taught all about equity management in class. It's a wonderful, wonderful opportunity here that I hope each and every one of you here take very, very seriously, because it's going to be the next opportunity that we're going to be seeing here for traders to capitalize on some awesome, awesome movement. Okay, so pound dollar, last but not least, GBP, USD. Okay, Alan, that'd be a great question to ask your account reps. I'm sure your account rep, you have a personal account rep, Alan? I just show the trading opportunities. I mean, as far as the plans go, you and your account rep should have a solid plan together. I'd contact them ASAP and figure out something. Let's see here. Well, and then I'd call again. I'd ask for somebody else. Just being honest. Pound dollar, and take a look at this opportunity. What do we see? Waves of the market. Wave up, wave down. Wave up, wave down. Wave up, wave down. What we've got here is a price action of buy low in the market. Okay? Does everybody here see how the market is at a buy low price point right now? Type in a yes if you see this. And so, again, you can draw Fibonacci's, right, and have them outlining what possible scenario here can take place. But the reality is this market U-turn at the 5.0 level, scored a point at the 1.1827, and is pulling back right now. So as it's pulling back, do we have any up AB boundaries we can take advantage of? Well, as of right now, we don't have any up AB swings on the monthly. So we just know we're at a price point that's buy low right now. And via buy low price point, one of the things we have to realize is, where does this market want to go as far as that pullback opportunity is concerned? There's many different levels of support and resistance that can make their way, but let's just take this information. Well, first of all, let me go ahead and do this. If you have this as a screenshot, let me know by typing the yes, and then we'll go to the next time level down. We don't have an AB boundary to the north right now, so I'm just going off of buy low price point of where this market is right now for a pullback, and then we'll look for enough AB swing and so on and so forth. So awesome. Okay, great. So the monthly, we don't have anything to link on the monthly to the daily, so we'll just simply zoom in. And at this point in time, this is how this is going to work. Right? If we see we're at a buy low price point, we need to figure out where the lowest or deepest retracement of this move is, and this would be here 1.19913, 1.19853. So this is the deepest retracement right there. So we would go ahead and draw a smart trend line, just like that. And as long as the markets stay above these trend lines, you can see that we're in a pullback, making higher high, higher low, higher high. So even though we're at a buy low price point on a monthly time frame, on a daily chart, buy low, sell high. Buy low, we're at a sell high price point for the market to perhaps come down to the trend line before the buy low price opportunity. So we take our smart Fibonacci's, figure out what's happening here. Let me delete this here. And, do we see any kind of pattern recognition? I mean, there's a big left tip, center tip, right tip, head and shoulder type of pattern here, but it doesn't qualify as the king crown parameters. So, by drawing the smart Fibonacci's, you can see here how the automated Fibonacci's got taken out. Start at the very bottom here once again. And so we've got an up A, B, C, D wave movement right now in the daily. And as you can see, we've got our A at 1.21093, our B at 1.26155, our C pullback here coming in at around the 5.0 level, and we scored a point. Did we fulfill the D? 12959. Nope, we did not. So this would be here, the D extension at 1.29283. And so the market here is waving. It waves up, waves down, waves up. It's waving down right now, so we would need to look for a buy low price point opportunity. Well, in this case, you know, at this point in time, this would be kind of a, I don't want to say a no trade zone because of right now being at the sell high price point, but I would venture to say that if you want to look at opportunity on the smaller time frame, take this D extension, link it to the 1 hour time frame, because right now it looks like we've got about close to about 100 plus pips of opportunity here to fulfill that D. Again, if you want to take a screenshot of this, let me know when you have a screenshot of this. This is it right here. Okay, so we have that on the daily. And so on the 1 hour, here's where it becomes an opportunity here to say, do I want to take the trade? Do I not want to take the trade? In this case, this is where if the market's going to retrace before it comes back up, perfect scenario for the grid, because now if it goes your way, beautiful. If it goes against you, you can get sized in, so the market does pull back, you can make the pips net that you're looking for. So, for example, if I go ahead here and click on, well, let me go ahead and first of all find the formula for the pound dollar. And so we go ahead and compress our charts here. And this is the highest point, this is the lowest point right here, so let's just measure that real quickly. Upwards of about 543 pips. 81 pips is the levels. So we'll take the matrix, put in some levels there, 81 pips. And so again, we'll put both sides because possible retracements to buy. And if I want to get closed out on 81 pips, right, then no problem. I'll click OK. And let me see here. Save there, okay? And there we go. So now the levels are in for 81 pips. So if this wasn't the live price and we were all the way down here, how would this work? You know, just see how this works here. Okay, just watch how this works here in this last example, because it's a wonderful opportunity to learn something as far as how this works, because the markets do move in a wave pattern, right? So let's just say for the purposes of demonstration here that this market here took us in right here. Okay, right here, let's say we got taken in buying right there. And each level is 81 pips. We just want to make 81 pips net, no matter what. And yes, you'll have strategic stops, Carlos, strategic limits, okay? And you'll also be taught about equity management with sizes of accounts and how many lots to trade and all sorts of good stuff like that. Here's the entry, 81 pips away. The market goes down, right? Rallies, retraces, boom. Hits it. We got 81 pips net, okay? Since our target or our trade, for example, is to go to the north, then we resize in, once again, to buy the market. You get involved. And what happens is the market comes down, right? Tags this right here. Well, now we're entered into another trade. We're sized in right there, okay? So our first trade's down. Market's going up a little bit. Our first trade's back up. Second trade's back up. And then we go down and get sized in back again, okay? So now we're down on our first two entries. But check this out, okay? Here, the market, did it just make 81 pips right there, yes or no? Yes, it did. So 81 pips was made right there, which means this trade right here is now at break even. Okay? This trade's up 81 pips. This trade's at break even. This one's down right now. The first one's still down. So that as the market comes back up, guess what just happened? Okay? Now, this trade is at break even, and our 81 pips net just took place. And we got our 81 pips net for the move. Having a Y or a yes if this makes sense, how sizing in works in helping you to mitigate your risk. Doesn't mean you have to place 10 standard lots on each trade. That's not what this is all about. This is about capturing pips, the art form. Your risk assessment will grow over time. That's for sure. Only you know how much you can risk per trade, right? So that's going to be shown in equity management for you in class. Once it's at break even, guess what? Since you know the target to keep on going to the north, you resize in the position, okay? You get back in trading the market on totally new trading opportunity. This market comes up, comes down, fulfills your 81 pips net right there. And since you know the target to the north trade is bullish, you're resizing in the market once again. There's 81 pips net struck once again. Resizing in the market. Get back in, 81 pips net once again. Resize in the market, 81 pips net once again. Get back in the market here. As it comes back down, it takes you into another trading opportunity right there, sizes you in. Here's where we're at right now. So your first trade's down, your second trade's at break even. If this second trade pops back up again, your first trade's break even, you made your 81 pips. Having a Y or a yes, if this makes sense to help you take advantage of the markets, or the markets take advantage of you. Now, Terry says, Jose, it seems like you could be missing a lot of pips in between. Well, it all depends on how you've been trading. You know, in this particular case, I'd much rather be sized in and look to get taken advantage of another trade that's going to be working for me than constantly getting stopped out and then the market goes my way. So it's a wonderful way to take advantage of the opportunity. And the question is, can you see yourself utilizing this method and winning upwards of 70 to 90% of your trades? Because honestly, with traders taking advantage of trades like this, when investors do this, it's very difficult to lose. So the cool thing about this is the following, okay? A lot of you don't have this, okay? And this is an opportunity to begin diversifying your portfolio like never before, because the reality is once these markets begin to take on opportunities and trades, okay, it's going to be sizing you in for an opportunity to make profit and break even on other trade that lost, so that you don't have to take the loss, you break even and make the pips. And what that does is that creates what is called an abundance of peace of mind. So for those of you that don't have this course, the expectations of this course are the following, okay? It's to help you optimize any strategy, to amplify your results. It's a must-have for the following traders. If you're a mastermind student, if you're a leveling student, if you're a target trading student, please type in your number right now. You're not going to be sorry you did. This will take your trading to the next level quicker than a hiccup. This is for traders who want to win anywhere between 70 to 90% plus of their trades of the time. And investors who want to take control of the wave movements. Folks, this is Grid Trading Course, new technology. Now, this course at full price is going to be $3,495. The early bird savings are gone, okay? Our next price bump up now is $2,245, which saves you $1,250 immediately. So you have my permission to type in your telephone number right now, but what makes this an interesting offer is not just the fact that you still save over $1,000 like the early bird savings did, so it's not that much of a price increase. And yes, we do have payment plans available. What makes this offer today phenomenal is the bonuses, because these bonuses were not supposed to be available for this next price increase, but we've made it available to you, where bonus number 1, when you type in your telephone number with the word bonus, you receive 3 months access to live trading follow-ups, the Grid Trading Course. And bonus number 2, get this, lifetime ownership of the Matrix tool. As long as you have charting software, you'll always have this matrix tool free for the rest of your life. Now, this was given to the early bird traders only, and everyone else was to be charged a monthly maintenance fee. But those of you that type in your telephone numbers right now with bonus, we opened up the matrix tool for life to 100 traders. That's it. And so far, I would venture to say there's not 100 spots left. So if you want the matrix tool for life that I showed you to help you size into the market, type in your telephone number with the word bonus right now, because this tool, once it's gone, it's gone. It'll be obviously a great opportunity to invest in yourself month in and month out, but why not have it for free every month, right, as a lifetime access tool? So we have payment plans available. We have the Matrix Lifetime tool available as well. We have 3 months of follow-up as a bonus. So Linda, thank you for your telephone number with the word bonus. Liz L, thank you for your telephone number. Wendell and Ivan, thank you. Michael, thank you for your telephone number. Joe, thank you for the kind words. Thank you for your telephone number, and I thank you for your time and trust, buddy. You're going to make it to the top of this game. I know it. Thank you for that. Andrew, thank you for your telephone number and the word bonus also. David, thank you for your number and the word bonus. I see you, Manuel. Thank you for your telephone number as well. Grant and Paul, thank you for your telephone number also. Tommy, thank you for your telephone number also. Again, if you want lifetime ownership of this matrix tool, we've got less than 100 left to deliver to you when you enroll today. As a bonus, type in your telephone number with the word bonus next to it, and you'll get this tool for free for life. Also, how many people in here want to eliminate their risk from this course? If you want to eliminate your risk from this course, type in the word yes right now. I want to see who in here is paying attention to what I just said. If you want to eliminate your risk from this course, type in the word yes right now. Okay. So, wasn't supposed to do this, but I'm on the air right now. This is being recorded. Every one of you who have typed in your telephone numbers, when you reach out to your account rep, when they reach out to you, tell them, hey, Jose said in the webinar about how I can eliminate my risk in this course. What's the plan? Every one of you who haven't typed in your telephone numbers yet, if you type in your telephone number right now during this time frame that I see right now on the clock, you will also receive our free Eliminate Your Risk Exposure Plan on this course. No risk. The only risk to you is inaction, folks. So those of you that typed in the word yes, I expect you to type in your telephone numbers now if you don't want any risk in this course, which is phenomenal opportunity, folks. So what does that mean to you? Well, when you type in your telephone number, we're going to give you a plan that gives you no risk. So we're giving you the grid trading course, manuals, checklists, class recordings, live trading follow-ups, unlimited class reattendance. I'm giving you bonus number 1 as an upgrade, live trading follow-ups for 3 months. Bonus number 2, lifetime ownership of the Matrix tool. The retail price of all this together is $5,485. With today's pricing, $2,245, that saves you $3,240, and we're going to eliminate your risk from this course when you type in your telephone number. Eliminate your risk, folks. If you want no risk to this course, type in your telephone number right now, and I'll give you these savings. I'll give you the Matrix tool for life. As long as you have charts, you'll get the Matrix tool. You can use a payment plan as well. If you need payment assistance, we can help you. We just celebrated our 23rd year anniversary event. We want to continue to extend the party and the savings to you, so type in your telephone number, and we'll also give you a risk, okay, assessment where you can talk about the market, what you want to do, what you don't want to do, what this can do for you, what this cannot do for you, and then we're going to help you eliminate your risk from this particular course. Steve, thank you for your telephone number. Kevin J, thank you for your telephone number as well. Colleen, thank you for your telephone number. I see you. Also, thank you to Jill. Jill, thank you for your telephone number. Chris will reach out to you. John C, thank you for your telephone number as well. Stephen, thank you for your telephone number. Also to Max, thank you for your telephone number. We'll reach out to you. Michael, in mid-May. The materials are delivered in mid-May, right when the course is also going to be shown, the live class. And the live class itself will teach you different strategies, a position strategy, swing strategy, and a scalp strategy as well with this sizing opportunities of the grid trading course. You'll learn how to amplify your results with optimizing the entry strategy of your choice up to a 90% win rate. And again, the deliverables will be given to you in mid-May. So this is what you get. A live 4-hour class, on-demand recordings, access to the Matrix tool for life, 3 strategies, checklists, manuals, workspaces, ongoing classes, okay? Wonderful opportunity to take you from where you are to where you want to be. Grid trading is a universal form of trading, folks. The reason why we didn't bring this to your attention is because it took too much time to monitor. Now with technology like the Matrix, you can trade directly from your charts. Manually trade, alert trade, signal trade, price entries are going to be delivered to you. It's around-the-clock smart technology for you and your family to trade with on any time frame. The grids will be available to you. Type in your telephone numbers now. I want to reach out to you and help you. Thank you, Luana. Thank you for the kind words. I appreciate that. Now, again, think of it this way. 1 month access to live trading follow-ups, I've already upgraded you to 3 months, okay? So instead of 1 month to fill in the gap sessions, I'm giving you 3 months of this opportunity here so that you can anticipate these expectations over and over and over again. Now, if you're a mastermind student, a leveling student, or a target trading student, type in your telephone numbers because this is going to be for you to optimize your strategies and take advantage of the markets very, very quickly and consistently. Again, all this, $3,495, you're going to be saving a huge amount of profit here by taking advantage of this opportunity. Barbara, thank you for your telephone number as well. And again, think of it this way, folks. If all this package does for you is teach you and show you how to make several $1,000s per month, month after month after month, capturing hundreds of pips, would it be worth the investment to you? Yes or no? Stop and think about it before you answer that question. How is your trading going right now? If all this package does for you is help you so that you can make sure you have the money to retire with, would it be worth the investment? You know, especially for those of you close to retirement age, is it worth it for you? Having a yes or a no. And if all this package does for you is help you earn enough money to travel around the world and spend time with your family and loved ones, would it be worth the investment? Absolutely, right? So again, with a $2,245 price point, and yes, payment plans are available, we're going to save you $1,250 immediately return on your investment, okay? Now again, the bonuses here are going to be fast. They're going to sell out very fast. They're red hot bonuses. 3 months access to live trading follow-ups and lifetime ownership of the Matrix tool when you type in your telephone number with the word bonus. We have 100 left, less than 100 left, and then this bonus will be gone. Everyone else that signs up after that will be charged a monthly maintenance fee for the Matrix tool. Is it worth the monthly maintenance fee? Absolutely. This tool is amazing to have in your trading software. But if you want it for free for the rest of your life, type in your number with the word bonus. Why not have this opportunity to get this incredible tool in your possession for all time frames, all currencies, to stay remaining on your charts for the rest of your career, folks? Remember, you're going to learn the formula for establishing the distance between the levels of the grid for a specific time frame and how to scale into the market to maximize profit by taking advantage of the waves up and down in the market. Okay? And your trade orders will be closed on net pips, which is fantastic. So again, with the bonuses, $5,045 today, $2,245 is your price point to get involved. You save over $3,000. Instant return on investment. You're saving more than you're paying to take advantage of this, and you get the tool for life as well. So I highly recommend to type in your telephone number right now before it's too late, everybody, because these Matrix tools will sell out very fast. Once we're done with this webinar, we're going to be sending out an email to those that missed out on the webinar, and when they call back and take advantage of the lifetime access, this tool will be gone. So if you're thinking about it, if you're contemplating it, if you want to talk about it, type in your telephone number, and we'll reach out to you right away. Not to mention that we also have a plan to help you eliminate your risk exposure. So if you'd like to eliminate your risk exposure in this course, type in your telephone number, and we'll help you eliminate your risk from this course, making this a no-brainer. Just want to make this easy for everybody to take advantage of and to continue to take action with very, very simply. So again, before I go, everyone deserves a vibrant and fulfilling life, everybody. Today, with our bonuses, you save over $3,240 after the bonuses, so type in your telephone number now. You're going to get lifetime access to the Matrix tool, and the reality is you deserve to have a vibrant and fulfilling life. Josh Martinez will coach you through these life-changing principles of the grid trading course. All we ask is that you promise to log in and actually listen. If you simply commit to doing that, you'll begin to learn and see how results are made. So make a decision right now by typing in your telephone number to maximize who you are, what you're capable of, and what you get to enjoy out of this trading career. But don't just listen to me in this web presentation. Do it. If you start this training and you don't feel like it's working for you, speak with your account rep, okay? Because we want to help you with what's called our Eliminate Your Risk Exposure Plan. Simply contact your education specialist right now. Type in your telephone number to find out more information about that. I'll tell you this, the only risk today is inaction. Bobby, I look forward to working with you. Thank you. Tim, thank you. We have Jeremiah. Thank you for your telephone number. Greg, thank you for your telephone number as well. We'll reach out to you here. Wanda, thank you for your telephone number. We'll also reach out to you. Again, ladies and gentlemen, type in your telephone numbers, and congratulations to all of you who are going to be taking advantage of this wonderful tool. It's the grid trading course. I wish you all health, happiness, and success. So again, stay by your phones, and congratulations, grid trading course students. This is Jose Tormos. This is FX MVP.